This is your LMAX exchange technical update for Friday, February 3rd, 2017. Eurodollar. So the euro continues to channel higher over the past several days since the start of January, with the early January after making 14-year lows, and this upside could still correct higher, with the market now closing in on critical resistance at 108.75. A push beyond that level will expose a measured move objective in the 109.30 area, and again there is risk for an overshoot in this market towards the 109 to 110 area at this point. However, the longer term downtrend still is intact, and the market should still be looking for a lower top at some point ahead of the next major downside extension back towards those 14-year lows at 103.41, below which exposes parity. So again, the 108.75 break is going to be important to watch, but then it'll be interesting to see just how long the market can sustain above that level. It looks as though, given the downtrend that the market, and given the fact that the market is also trading close to overbought studies now, that if we get up into the 109, 110 area, the trend will look a little bit exhausted, that correction, and then again poised for a resumption of the broader downtrend. There is a possibility that there is a more significant structural shift if the market starts to establish above 108.75, but at this stage, despite the possibility of an overshoot and a break, the bias is still to the downside, and the chart still indicates a downtrend in this market. Sterling dollar. So cable has come up to some critical resistance at 127.75. That's its December peak. A break above that level would be significant and could mark a structural shift here, with the market potentially shooting up into the 130s. At the same time, this has been an impressive rebound, and the market is still confined to a downtrend while it roughly holds below 27.75. And so any topside failures towards that level are to be expected, in favor of what could be a bearish resumption back down towards those recent lows, which also are just off that plus 30-year low that we saw in October of 2016 at 118.40. So again, keep an eye on 127.75 above, which should be a very strong resistance point. As far as support goes, a break back below recent support around the 24.13 area would accelerate declines. Dollar yen. So dollar yen has come back down over the past few sessions, taking out a consolidation, and this break of consolidation support could expose a fresh measured move downside extension towards a measured move again at 109.50. At this point, though, we need to see a close below the 112 area to really confirm and accelerate this decline. But again, there is a measured move extension now exposed to the 109.50 area in dollar yen. Euro Swiss remains confined to a downtrend, and there is risk for the market to continue lower to take out that 2016 low at 106.24. Aussie dollar. So Aussie continues with its impressive surge in 2017. At this stage, though, the market could start to look a little bit extended in here, and there is only risk really for a little bit more of a push up towards the 78 area, where there's significant medium-term resistance. At that point, or over the coming sessions, we should soon see, given the fact that the market is trading into this medium-term resistance, the market stalling out in favor of a resumption of declines, potentially that takes us back down over the coming weeks to significant medium-term support at 71.45. Dollar CAD. So dollar CAD has recently traded up as high as to the 136 area. The market now is looking like it's pulling back after taking out some critical support in the psychological barrier at 130. This does expose a bit more of a drop below 130, but ultimately it'll be interesting to see how the market responds around this figure over the coming days, with the greater risk of this still constructive trends remaining intact and a higher low ahead of the next major upside extension. Next key medium-term support in dollar CAD comes in looking back to the August of 2016 lows around the 27.65 area. Kiwi dollar. So Kiwi has had a nice run in 2017, and this market looks like it's starting to stall out up above 73. Certainly there's a lot of case to be made for a top off that 2016 peak. The market does look kind of toppish, but it will need to roll over to confirm and strengthen that case. Look for a close back below 72 to strengthen that case of a bearish resumption in Kiwi dollar. SPX 500. The S&P 500 is now trading just off record highs. It's been trading off over the past few days. The market still, though, retains a highly constructive outlook, and there is risk for fresh record highs beyond the recent highs just over 2,300 and towards the 2,320 to 2,340 area further up. A break back below 2,232 will be required to take the pressure off the top side. Gold. So gold now is looking like it wants to trade up following being supported down towards the 1180 area. This opens the door for a fresh upside extension now towards a measured move at 1260. At this point, only back below 1180 will delay that constructive outlook for gold.